I'm Investment Director and UK Counsel at NextEnergy Capital. I started my career as an M&A lawyer many years ago and have been working across the energy sector since 2010 with a particular focus on renewables. Working closely with our COO, Ross Greer, I'm responsible for the operation of the existing NextEnergy Solar Fund portfolio and also the investments that the fund makes into complementary technologies such as energy storage, as well as progressing our investments into solar. NextEnergy Solar Fund is a specialist renewable energy investment company listed on the premium segment of the London Stock Exchange. The fund's mission is to generate a more sustainable future through clean energy, while providing ordinary shareholders with attractive risk-adjusted returns, principally in the form of regular dividends. We do this through a diversified portfolio of solar energy infrastructure assets and complementary technologies, such as energy storage. As at the 31st of March 2023, the fund has 865 megawatts of operational solar projects, most of which are in the UK, and total invested capital of approximately 1.2 billion. The fund has also invested in a private equity fund, which is focused on building and operating solar assets internationally. NextEnergy Solar Fund generates income by converting solar power into electricity at scale. The fund owns 99 physical utility-scale solar plants that generate the electricity, which is then sold. It has three main revenue streams: government subsidies, such as the renewables obligation and the feed-in tariff, short-term power price agreements with utilities, and also longer-term power price agreements with utilities and some business users. NextEnergy Solar Fund has a specialist energy sales desk that sells the electricity we expect to generate in advance, increasing certainty over the price the electricity will be sold for. The energy sales desk looks to lock in prices above the advisor forecasts, increasing the weighted average price of electricity over time. This approach mitigates against the volatility of wholesale market prices and supports our dividend cover. Around 50% of revenues are typically RPI-linked government subsidies. The other half of revenues are generated through the sale of budgeted power generation into the market through the sales desk. The recent elevated power prices have offered attractive hedging opportunities, which the fund has benefited from and will benefit from in the years ahead. The investment process at NextEnergy Solar Fund is relatively straightforward and is focused on a disciplined allocation of capital in line with the fund's mission and investment objective. The fund is currently advancing a pipeline of UK solar, international solar, battery storage and co-investment opportunities to complement the existing portfolio and diversify asset-specific and market risks. ESG factors are carefully considered throughout the investment process and throughout asset life. Over the years since IPO, various incremental strategies have been implemented, including investment into subsidy-free solar assets, diversification of revenue sources by amending the investment policy to allow 30% of GAV into international solar assets, 10% of GAV into standalone energy storage, and 15% of GAV into private solar infrastructure funds. Earlier this year, we announced an energy storage strategy and a plan to increase the investment limit from 10% to 25% into standalone energy storage to allow the fund to benefit from further diversification of revenues and further diversification of technology exposure. We also, earlier this year, announced the sector's first capital recycling strategy. The idea behind that was to crystallize the value of the investments the fund has already made into subsidy-free solar, and to use the proceeds to reduce exposure to elevated interest rates by paying down some of its revolving credit facility. Doing that will also increase our capacity to pursue other value-accretive investments, such as progressing energy storage projects and potentially buying back NextEnergy Solar Fund shares which we consider to be an attractive investment. The 5 assets comprising the capital recycling portfolio have been carefully selected because we believe they'll be attractive to a broad selection of institutional and strategic investors. They include a blend of long-term corporate PPAs, CFDs, and merchant exposure for value optimization. We're also aware of the challenges and delays many investors are experiencing in connecting new assets to the electricity grid. New operational assets, such as this portfolio, that have already run the gauntlet should be a very attractive way for them to deploy capital whilst avoiding the uncertainty they might otherwise face. For the period ended 31st of March 2023, the ordinary shareholder total return was 8.6%, and the NAV total return was 7.3%. As at 31 March 23, NextEnergy Solar Fund has achieved an ordinary shareholder total return since IPO of 66.9% and a NAV total return since IPO of 76.6%.